So for the ones who do not know, NOAH is actually not only a conference organizer, but our main business with what we make money is mergers and acquisitions for internet companies valued above 100 million euros. My partner and I have done a few transactions for Softonic, Fotolia, BigPoint, Engrande, Grupfoni, Yatego. This is a small selection of our pan-European transactions we have done to date. There's just one thing you need to remember, and you probably hear this from every banker. NOAH Advisors does the best M&A in the market. Now, let's talk about what we think is worth mentioning, what we observe in our daily jobs when we meet companies like yours and talk to investors. First of all, why do we do this conference? Well, we do the conference to showcase companies out of Europe, some of them very well known, some of them not known. But one thing is for sure, there are many European internet companies of size. This is a small selection of companies we believe are valued over 200 million euros. So when we ask, how big can it get? First of all, we have to establish the question, how big is it? And it's so big that the logos are getting smaller and smaller on the page. We have many, many European internet companies of size. Now, when we talk about sizable companies, it's one thing, but let's talk about innovation. And when I meet Silicon Valley investors, they always have a kind of 90 miles radius view. And we were talking to investors about companies in Europe, and some of them literally said, is the company further away than a 30 minutes drive? I won't invest if I have to drive further than 30 minutes. Now, I believe that it's worth actually boarding an airplane and not only coming to our conference, but meeting some of the European companies, because some of the innovation or new business models or best-in-class execution, companies like ASOS, for example, are invented in Europe. This is a selection of the companies we think in Europe have really done something unique to the global ecosystem of internet. Now, what is on our minds? And what is there to remember? Let's talk about the exit markets. Now, as much as I wish, because it would make my life much easier, the US strategics are not really as active as they used to be. And I guess some of the reasons are related to a few examples didn't go so well. So I'm afraid we still have to wait for the big M&A bonanza from the US to Europe. There here and there some selectively transactions, especially in the private sales segment, where Amazon and eBay bought brands for friends and buy VIP. But so far, over the last years, in terms of big deals, we haven't seen too many. However, we are copying what's happening in the US. So pre-IPO mega rounds, and there's a slide on this coming, are happening more and more. IPOs are back globally. And in fact, a lot of companies, we discussed this yesterday, from Europe are going public in the US. For example, Wix or Criteo, which luckily enough, on time for our conference, IPO'd last week with great success. Emerging markets are gaining of importance. There are tons of investors we talk to who say, Marco, don't annoy us with this kind of big economy, Western world stuff. We want emerging markets. Naspers is one example. Israel had an amazing year with some amazing success story. Yuri Levine, the founder or president of Waze, who started the whole company, normally comes to NOAH every year. This year he had to apologize himself. He used his divorce as an excuse, but I learned later that Google-acquired businesses are not allowed to speak too much anymore after. So Google and Waze, amazing exit, Wix IPO, Marine Software, etc. There are some examples of US investors coming to Europe. And out of my perspective, and I'm a very simple thinking person, when I look at US and European valuation, I would say, well, this is a no-brainer, guys. You invest into Europe and you sell to the US. Not really. As we know, the 30-minute rule is applying to a lot. But there are exceptions. For example, Union Square recently invested in Halo, which is a company founded in the UK, and Motane, which is a sports app from Germany for soccer, where they invested, I think, 2 weeks ago. Quality and large assets always trade. So when you are big and you have scarcity value and you have quality, there's always going to be a transaction. Let's talk about valuations. Well, as we many times said at this conference, even more than last year, the valuation gap to the US is increasing. And funnily enough, it's not only the valuation we are interested in, it's what's actually possible. I don't know if you know, but I used to work for Lehman Brothers 12 years, from '98, and I did like 10 plus IPOs in the internet. And when you didn't really have a profitable business, kind of 2004, 5, 6, I did the IPO of TomTom, for example. I mean, don't really bother investors. They like growth, but if there are no profits, usually it's too early. Today, the game has completely changed. If you look at some of the IPOs happening, you can go public with losses. In Europe, you will have very, very long investor meetings. Now, e-commerce, which is kind of the equivalent of the retail industry, online is trading at the highest multiples. There's one segment which is higher, which we come to in a second. But e-commerce PE ratios are at 40 times. And the interesting thing is, if you look at Amazon, for example, which trades for ages at a huge multiple, it's because they can do what they want to do without investors asking any questions. You want to build another 50 fulfillment centers for a few billions? Sure, go ahead. We are investing on your profits of 2020 because you're becoming the new Walmart of the internet. So once you really have the trust of the investors, and be it private or public, you can do what you want. Let's see how the Amazon story continues. I remember in, I think it was 2001, where they had working capital issues. They couldn't really serve some of the outstanding debt. They restructured their entire purchasing, and they paid publishers once a year while they got the credit card payments daily. That's how they financed their business. So no more venture capital rounds back then. They just changed the way they pay and get paid. Now, what does really matter for valuation? Well, it's growth. It's probably the key of all. It's profitability, but profitability doesn't really mean what we have seen in many IPO prospectuses, like EBITDA plus expansion marketing, which I think the Groupon guys did quite well, so adjusting and then looking profitable. No, profitability means once the business is mature, where are you? And there are tons of businesses in private sales, for example, where the gross margins were so low, like Brands for France in Germany, that, okay, even if all stars are aligned and you grow your business to $1 billion revenues, will you ever really make net income after tax? Something so boring and old-fashioned? Maybe not. So profitability matters, at least for us at NOAH. Now, a more important thing, apart from growth and margin, and that was the question we asked yesterday morning to two star investors, Philipp Freise from KKR and Klaus Hommels, a more important, or the most important one is, what's your market position? The number 2 or number 3 usually trades at a discount to the number 1. And as we learned from our Yandex friends, in search, classified, any marketplace, you have the 70-20-10 rule, where the number 1 takes 70, number 2 20, and number 3 10%. But interestingly, the price to be on the platform doing transaction on the number 2 for the merchant is usually half the price. So to compete with the number 1, they have to have a much lower price. It's a hard game. So market position is key, and then with market position, also the market opportunity. Our conference theme is, how big does it get? Yes, there are great niches. And there are reasons there are niches, because nobody wants to be there. So when you have a business, make sure your underlying market opportunity is sizable enough. And Stan Laurent's number of 67 billion market opportunity stuck to my head. You need to be up against something, and you need to have the right products and tools to address it. Now, what was the other thing Philipp and Klaus said? And in fact, also Stefan. Stefan Glanzer called his investment vehicle passion capital. He only looks for passion. The idea can be really bad. As long as he partnered and invested in the right team, he will be fine. Why? We call it guild. They will deliver somehow. And there are interesting businesses around which have redesigned the model over and over and over again. I'd like to mention King.com. They started with a casual gaming business. The whole Facebook thing came. And Ricardo, who I guess is very busy these days and apologized for not coming, normally he's also here every year, reinvented the business by going social and did something which I think nobody saw coming, replaced Zynga as the #1 social games publisher as a huge margin. So management, sadly, is the most important. And it's hard work, but also it's passion. Now, EBITDA losses are not an issue anymore, which we established upstairs. Now, some kind of European big venture capital rounds, we want to say to the Americans, we can do it too. It's not only you doing the mega rounds. And Klaus' argument in the past was always, Klaus Hommel's argument was, well, the Americans have an advantage over the European businesses. They may not have better execution. They may not have the better management, but they have more money. Since they have more money, they will win. That is the key thing. Now, is it really the key thing? Well, we looked at a few companies, and please, private equity, venture capital, growth capital providers who are loyally coming to NOAH, don't be upset with me for putting this slide on. I just want to make one point. Money isn't everything. So these businesses, and some of them are old businesses, like Thomann from Germany, which is a musical instrument online retailer with over 500 million euros of revenues. These guys have made it on the net without ever having raised any money. There are a lot of German companies here because they're very traditional, conservative, family-run. They don't really like to have too many people in the kitchen discussing strategy, so they like to keep it tight. And you can see that some of them did an amazing job. Now, how do we think about valuation? And as a banker, the question #1 I get, what's my company worth? So we think it's a very difficult question, and usually we try to say it's less worse than you think. Now, why do we think so? Well, you have to look at this in several phases, and some of the names are a little bit old, so I apologize for that. But as a management team, you get credibility on day one. So there are some serial entrepreneurs, and some of them are here in the room, they get valuations where everybody scratches their head, how can that be? Well, because they're up to their next big thing, and you don't want to miss it. So management is one of those where Branch Out, for example, in the US, raised, I believe, $25 million based on maybe a napkin or a business plan. There was pretty much nothing in place. Sadly, that one didn't really play out too well. On the other side, when Spotify raised, I guess it was 5 or 6 years ago, a big amount from some Scandi VCs, they had amazing technology. What was it? It was speed, it was really user-friendly, but the business model was still evolving. Daniel hadn't secured all the rights at that point. Now, what's the next? Usage. Oh, we remember in 2000, MP3 and all these big valuations, mainly driven by usage. So once you have a good team, you have the technology, you have the users and the KPIs. Softonic back then, which was the second deal NOAH did, together with Digital River, we sold part of the business. Users and KPIs matter. So if you have that, what's the next step? Well, the next step is revenue. So when you have commercialized your product, you have your usage, at some stage you want to think about monetization. So when you had revenues, and we saw a deal in Russia, Ozone, which didn't have a lot of profits, but did get a great valuation based on revenues. And then there's the EBITDA, which is my favorite thing to look at, to be honest. Sometimes we do adjust it a little bit for investments. We love EBITDA. We call this conference the EBITDA conference. Now, market leadership, well, that's the key. Once you have achieved a certain market position, you do get a premium over everything. So, increasing valuations, however, multiples go down. So the sales multiple from left to right goes down. And on the other side, for investors, the good thing is the further you move down the chain, the lower the risk. So here we have a pseudo-intellectual formula built up to calculate the valuation multiple. Now, let's put it in numbers. Today, we have an interesting phenomenon, and we did the slide kind of overnight after the party, so maybe the numbers are not 100% correct, but they should be intentionally. So this year, Internet, the gray bars are valued at much higher multiples compared to where the valuation multiples were last year. I think that's great news. And this is consistent, fortunately, with the slide Klaus Hommels put on at the beginning of the conference, where he said that over the last years, the valuations went up 4 times, from 1.5 to 5.5 billion. So I told you earlier, e-commerce is one of the highest valued segments. On an EBITDA, however, classifieds, marketplaces, the frenzy for Scout24, every private equity company has a look, and the sleepiest private equity financier wakes up and says, maybe I should spend some time with these NOAH guys. Maybe I should go to the NOAH conference. Internet is really there. So here you have an interesting phenomena. So when we look at the valuations at 2012, like a year ago, exactly a year ago, by the way, the multiples were much lower. So we saw an increase in internet valuations. How does it compare? Well, this is one of those slides where we have to spend some time on, because the PE, US and Europe and the whole regions are a little bit screwed. But you can see that also here, over the years, there is a difference. Now, there's one interesting phenomena. And if somebody can read the numbers, you will say, this doesn't make any sense, because Marco told us the whole time at the conference, US is trading at a premium to Europe. It doesn't really look like the numbers say the truth. Why is that? It's because you have a few like really, really high outliers, like the Spotifys, the Twitters of the world, the Facebooks, which screw the picture. But then you have some really old stocks, like a Value Click, or Vistaprint, or Blue Nile. I mean, you have eBay. You have some interesting companies which don't trade at such a high multiple. So in this study, we took over, I think, 250 public internet companies from all over the world. Now, I love this slide. So originally, I wanted to do a Hall of Fame of all the things which people said in the past which didn't come true. This was my favorite. So let's be wrong, the nicest we could find. I don't know if you can read the slide, but this is from Universal McCain. They call it Next Thing Now. The title Next Thing Now didn't really work, because they were making the statement that in terms of social network, the business of Facebook, it would be impossible to have a global platform. In fact, MySpace was still #1 in 2008, as you can see in the slide. And as we know, the picture does look today very, very different. So if people tell you in ties and suits like me, projections or predictions, don't believe it. So that's my little presentation. What's going to happen for NOAH next year? Same dates, same location, and we want to do even a more business-focused approach. So when you saw the fund book, for example, we're going to do this for all the other categories: startups, service providers, all the different stakeholders at NOAH, because we want to make your conference visit even more productive. Customer acquisition for our attendees. We want you not to only find investment opportunities, but you want that your investment opportunities find customers at NOAH. Thank you very much.